Alright guys, so you may think that this trade war stuff is behind us because Bitcoin has already recovered from its recent crash. But if you've been paying attention at all during the Trump administration, then you know that things could change on a whim. Not to mention, the current agreement between the US and China is only for 90 days. So this whole circus could start back up again in a few months' time. That's why today I want to analyze 3 possible scenarios as to how these tariffs and trade war stuff could potentially play out in the long run. Because this is really a news-driven market these days, so Bitcoin could either pump or dump depending on what happens. That's why you gotta watch this entire video because I'll share the likelihood of each scenario and how they would affect our bags. Now, before we dive into scenario number 1, let's quickly recap how we even got here. So earlier this year, Trump imposed tariffs on pretty much every country in the world. People were calling it the Trade War 2.0 because if you remember, Trump did something similar in his first term, mostly against China. But the important part here is that these aren't just small tariffs that other countries can shrug off. Nope. We got tariffs of 145% on China, 25% on Canada, Mexico, and even the EU. So Trump has been slapping these on everyone, even our close allies, with the goal of renegotiating trade deals and just reshaping the landscape of global trade. So that must be good for the US, right? Well, the problem here is that it has caused inflation, supply chain disruptions, and just general economic uncertainty worldwide. Like in terms of inflation, the Tax Foundation estimates that these new tariffs will cost the average American family about $1,300 extra per year due to higher prices on everything from groceries to gas. Analysts estimate that car prices could go up by around $3,000 and gas could jump up by as much as 50 cents per gallon. So these tariffs are no joke for both Main Street and Wall Street. But does this stuff actually affect us crypto and Bitcoin investors? Well, yes, it absolutely does, because this stuff affects all markets. Like tariffs increase inflation, right? And that affects all sorts of things. Not to mention, it makes the Fed want to raise interest rates, or at the very least, hold off on cutting rates, which all of us have been waiting for a while now. So as a result, crypto swings all over the place as crypto is still more of a risk asset these days, and Bitcoin has yet to fully embrace its identity as a store of value or digital gold. So point is, depending on how this trade war plays out, crypto could either pump or dump, or maybe even both back to back. Now, I promise we're gonna get to scenario number 1 real soon. But first, I wanna take a really quick look at what happened to Bitcoin last time around. Like during the first Trump administration, when he did the Trade War 1.0, we saw Bitcoin initially crash alongside the stock market due to all the uncertainty. But then it quickly recovered as some investors saw it as a way to protect their money against inflation. Now, fast forward to today, we saw Bitcoin do something similar, going from 109K down to around 76K and then back up to 104K right as tariff negotiations got going. So clearly the volatility is not gone. It's just evolved. And all this trade war and tariff stuff is driving that volatility. Alright, so right now, most of the market is betting on a partial resolution to all this trade war stuff, with some people calling it a détente. Basically, this is scenario number 1, and it says that the US and China will find some common ground and bring tariffs down to more reasonable levels, as well as agree to cooperate on certain things such as AI, climate, and currency manipulation. This is pretty much what has happened already, but if it becomes the long-term status quo without either side changing its mind, then we'll likely see global inflation drop to around 2.5 to 3%. We'd also see global GDP growth rebound to around 2.8%, and supply chains would stabilize and adapt to a new normal, which some people are calling the China plus one strategy, where everyone diversifies, but a lot of it still stays in China. Now, for Bitcoin specifically, this scenario is by far the most bullish, and we're already seeing a lot of this optimism as Bitcoin has jumped back to over 100K. But if a big long-term deal is reached, then I could see Bitcoin rallying even higher, like to 120K or even 130K within weeks. Plus, we all know that institutions hate uncertainty, even more than us retail folks. So if all this stuff gets cleared up, then it opens the door for big players such as BlackRock or Fidelity to go full steam ahead with their crypto plans. So yeah, that's scenario number 1, aka the most bullish scenario. But before you start aping into everything, let's pump the brakes a bit. Because if history tells us anything, it's that things can change on a dime. So let's look at 2 other potential scenarios that we should at least be prepared for, even if you don't think they're as likely as this first scenario. Now, before we get there, I want to quickly share with you something new from our channel partner, 3 Commas. That's a huge help if you're into automated crypto trading. So they've recently launched a new backtesting feature for their DCA bots. Before, you basically had to guess how your bot would perform, which is honestly not ideal. But now with this one-click backtest button, you can instantly test your bot's settings against historical market data, seeing exactly how your strategy would have performed. I'm talking profits, losses, fees, even maximum drawdown, all before risking your own capital. It's super easy. You just pick a time frame, run the test, and you get detailed analytics instantly. And you can even export results to a spreadsheet if you want to dig deeper. So this takes all the guesswork out and helps you trade smarter and safer. That's why if you're into crypto trading bots or have been thinking about trying them out, then definitely check out the new 3 Commas backtesting feature using my link below. Alright, back to the trade war. And scenario number 2 is that Trump doesn't like the concessions or actions of China during this truce period. And he goes back to those high tariffs and holds them there for a while. Now, if this scenario becomes a long-term status quo, then it'd of course be bad for the economy and for markets. Like if this were the case, then analysts predict that we see a GDP loss of around 2 to 3% globally. They're also predicting a persistent inflation rate of 4 to 6%, along with significant supply chain disruption. Some economists even say that under this scenario, US imports from China could completely disappear by 2030. Now, in terms of what this means for Bitcoin, well, it wouldn't be good, of course. I mean, we could see repeated 10, 15, or even 20% crashes anytime some negative news comes out. I mean, sure, there may be a little more adoption of crypto as people look for ways to avoid inflation or move capital around the more restrictive environments. But overall, investors would still be risk off and institutions would definitely remain cautious due to all the uncertainty. Now, if you thought that was bad, just wait until you hear scenario number 3, which is the real worst case scenario. Because in this scenario, tariffs spiral out of control and trigger something called stagflation, which is both high inflation and a recession at the same time. Now, in this scenario, global economic growth would grind to a halt. And you may think that this is unlikely, but some analysts think that there's a 1 in 4 chance of this happening. After all, JP Morgan already estimates that there's around a 60% chance that we enter a recession this year. And for crypto, this would mean a painful crash, with Bitcoin hitting new cycle lows of around 50K potentially. However, if central banks start up their money printers again to stabilize things, then we could see Bitcoin rebound sharply in 2026, just like it did after the COVID crash. But anyhow, now that we know all 3 potential scenarios, we have to determine how to navigate them and how to tell which one we're in. Well, to do so, there are a few key indicators that we gotta pay attention to. First, are the negotiation updates, of course, like any major progress or breakdown in the talks between the US and China and other countries. Second are the inflation reports, especially the CPI and PCE, to see if the tariff-driven inflation sticks around. Third are your typical economic health indicators, like job numbers, consumer confidence, manufacturing data, etc. And fourth are central bank decisions, be it interest rate changes or whatever, as those could drastically affect the markets as well. Now, given that scenario number 1, aka the partial resolution, is currently the most likely scenario, I think we can start to position ourselves bullishly. Like maybe increase your crypto holdings a bit, especially in Bitcoin and strong altcoins like I have. But I strongly advise you to keep some dry powder, because if the negotiations break down again, then crypto would likely crash again. And that would give us amazing buying opportunities, especially if we enter the prolonged trade war or stagflation scenarios. So that's my personal take. But the point here is that you should know better than to fully trust all the trade war optimism going on. Trump is unpredictable after all, and as we've seen in the past, the market can flip on a dime. But what do y'all think though? Are you trusting this latest rally? Or do you think that this drama is far from over? Let me know in the comments below. Also, one asset that has benefited a ton from all this uncertainty was gold, which has set new all-time highs as recently as a month ago. So if you're wondering if you should buy gold or Bitcoin for your investment portfolio, then just watch this video right here.